Hey, everybody, it's Chris Miles, anti-financial advisor here. Hey, I want to talk about another situation I came across with a guy that reached out and said, hey, I've actually looked at some infinite banking stuff, but could you review this with me too? And understand, like, infinite bankers are not all the same, right? I've seen infinite bankers over the years. And so many people call themselves doing infinite bankers, but the truth is they vary just as much as the insurance policy they design do, right? There's so many variances. And how do you know you're really getting the best one? And that's what he wanted to know. He's like, I want to make sure I get the best return on my policy. He's like, I think this looks pretty good, but I want to get a second opinion. Guys, by the way, if you're in this situation, I encourage a second opinion. And I'll tell you, we'll be honest with you. If we can't do any better, we'll let you know. But the one thing we do is that we do offer is that we ensure that we try to get the best rate of return on a policy as possible. And so that's why he came to me. He says, hey, Chris, I want to put you to the test. Well, check it out. Here we go, because this is actually apples to apples scenario that we're comparing right here. So I'm going to share my screen so you can see it. So here's the funny thing. It's actually with the same exact company. So people say, well, which company do you recommend? The truth is that it's not just about the company. It's about the agent, about the insurance agent that's actually designing this to make sure they do it the right way. So here's what this agent came back with. And I'll call him a good infinite banker. He's doing a good job, right? And the guy thought so too. He's like, yeah, I'm looking at this. He's like, in the first year, you put in almost 38,000. He's got about almost 24,000 in there, right? So about 14,000 goes the cost in that first year. By the time he gets to the end of 7 years, he almost broke even. You notice he put in 265,000 total, but he's got about 263,000. So he's a little short. But by that 8th year, when he stopped paying into it, great, it works. It's paying for itself, right? At that point, it's doing fine. Now that means it took over really into the 8th year before he actually broke even on his costs. Now I said, I can show you the same thing. By the way, they were trying to convince him to put all this money up front, like this whole 265,000, put in up front, let it sit in their little saves account, earning 2%, right? In the meantime, and this is what the result is this is what he gets. I said, don't dump a whole bunch of money in and let it sit in their savings account, because you can make more money outside of it. Instead, just pay that 37,871 as at each year as that payment comes up. Here's the difference, right? So remember, first year he had about 23, almost $24,000 the first year. Check this out. First year, almost $30,000 in that first year right there. So there's $6,000 more from day one. Day one, there's $6,000 more. That means that just from that first year alone, he's overpaying $6,000 that's going to insurance costs and agent commissions, right? So he's overpaying on this. Then notice here, remember, it took him till the 8th year before he broke even. Here, look at this. You got $100 more in year 5 than what he paid in that year up to that point. So he's already got more cash by year 5. By year 7, he's got $24,000 more than in the other scenario. The other scenario had 263,000. This one has 287,000, and then it keeps growing, and it massively kicks the crap out of that one from that point forward. Guys, that's the key subtle difference. It's not about which company you use as much as it is about even just which insurance agent, but it's about doing it right. And that's really our commitment, is to getting the best cash value possible. And we've seen this time and time again, where it's costing people tens of thousands of dollars, sometimes into hundreds of thousands or even millions of dollars, because they overpay. We don't want you to do that. That's why, if you're getting these things quoted, let us put our hat in the ring. Make sure you're getting the best deal. And if the person's doing a great job, great. On a very rare occasion, someone might match our numbers. But I will tell you, I have not yet seen somebody beat our numbers legitimately to this day. Doesn't mean it's not possible, but it has not happened. I don't want you paying too much money. Too many people say, hey, I don't want the huge death benefit. I want this cash to work for me now. And especially if you're a real estate investor or a business owner, where you want that money to start paying you quicker, and you can start double dipping, having your money work in 2 places at the same time, not just have a retirement, even though this will have more in retirement, but have more cash now so you can leverage it and create more wealth today. This is the route that we go. This is what we teach. This is what we're here. And this is what ticks me off so bad. It keeps me doing this. Even though I'm financially independent, I don't even have to be doing this. I don't even need to do this business. But again, our mission is to make sure you don't get caught in the same trap that I got caught in when I had too expensive of a whole life policy that I bought almost about 15 years ago. So I want you guys to get the best possible deal you can get. Be sure to reach out to us. Go to our website, moneyripples.com, go to the contact us page, reach out to us today to see how you get the best policy possible where you get that max ROI infinite banking.